Hello everyone. So today is 6th of July and today we had our first weekly expiry of this month. So I hope it all went good for you, and let's discuss what happened during the market hours and what we are expecting next. So yesterday we analyzed that yes, fresh call writing positions have been taken by the big guys, but they are also have kept their put writing positions as it is, and I also told that 19,000 for Nifty 19,400 both side writing has happened. Okay, so I did not say that only call writing has happened at 19,400. Both the side writing happened, and in Bank Nifty we also talked about the positions and we talked about the range. It worked perfectly. Like I said that the range would be from 45,000 to 45,300. If you don't believe, just go and check yesterday's video. Okay, the range perfectly worked, and between these three levels, from 45,000 to 45,300 only the major positions were taken. So it was natural that Bank Nifty will be consolidating within these 300 points range today. And for Nifty, now let's come to Nifty. So Nifty, I said that the range I expected like for 19,420. Okay, because the 19,400 call letters were there. So as Nifty went in the morning, there was a sharp fall, but then it recovered. But it recovered, and again it came down to near about 19,436 or 19,440. Okay. Now don't think that they are at a loss because just market went up by 50 points or maybe 40 points. They are not at a loss because they took these positions yesterday. They shorted it around 65 rupees, 60 rupees, 70 rupees. Okay, just go and check the premium of yesterday for 19,400. Okay, call side. So they are not at a loss. Okay, they are still profitable. So now this consolidation was going on because there were mainly two things. Because also at 19,500 some writers were also there, but some buyers were also there. Okay, so 19,000 put side. So there was that confusion. So that's why market was consolidating for a long time. And yes, so the 19th now after at this point, at the very end, what happened was after this still they tried to bring down the market, but when they couldn't, they tried to the 19,400 call writing positions. You see that from this range, 50 points range, they started shifting to 19,500 PE. Okay, and then this up move came and everything was predictable. So yes, today's analysis, talking about today's analysis. So here what I'm doing is, again I'm saying that don't jump in into the market because of some FOMO or anything. Even yesterday also I said that I am waiting for a perfect opportunity. Okay, so market was consolidating. I had taken put writing positions. I also told you that the positional put writing positions, I shifted it a little up. Everything you know. Okay, yesterday's all these positions I know I have been carrying forward. So yes, those were giving positions, fine, but taking new positions just at the money or near to ATM, so that's risky. So for that, I clearly yesterday told that I'm first trying to understand the market, what they are what the big guys are doing, what they want, because every day there is some kind of surprise coming. Okay, so even after this, after I take the position and the surprise come, I'll be blown out. Okay, so that's why I'm just waiting and observing, then taking the perfect trade. Okay, so here first consolidation was going on, and also there was an opportunity for the writers without any risk, a minimal risk for the writers, the sum of 19,500 PE and 19,400 CE. The sum was almost 120. So if someone shorts writes both of them, then the sum is 120, and easily if Nifty closes in between anywhere from 19,400 to 500, easily gets a 20 points reward. Okay, and if the now at the end we got to know that it's going above 19,000, it's going to 19,500, then you can close the loss making leg and write the winning leg, and moreover you can shift the shift your writing position. So like suppose the call writing positions is giving you at a loss, so you can then close it, and you know that the market is going to 19,500, so you also shift that writing position to 19,500 PE. Okay, so that's how you can like maximize your winning. But yes, 20 points was a sure shot here. But not now. Coming to the next is 19,500 PE. Okay, so there I got the opportunity like at 2:16 p.m. I knew that like market was going up. So this is for 2:15. Okay, 2:16 market was going up. I knew that the buyers 19,500 put buyers are there. Some, not all, some put buyers are there, and also these 400 19,400 call writers are also there. So market has to give a dip. Okay, it went sharply, like this was a huge rise. Okay, so I mean suddenly it rose like from you can very well see like 19,458 to almost, even if you look at this week, so 19,490. Okay, so almost a 40 points jump suddenly, and then I clearly knew that market has to come down. I further averaged out the position, and yeah, so the price went to 29. Okay, and 1421 when market was still just at the top, during that time averaged it out by buying 30, so average price was 38, and then market gave a sharp fall and closed it at 63. Okay, and that was in percentage return, that was almost 66%. Okay, and then as I told you that the 3 p.m. move can be captured. Okay, especially during the expiry days, and even like I showed you it on FinNifty expiry day. Today we had expiry, and before they like look at just 3 minutes before, I told the game plan. That is, the game plan is of 3 p.m. is the C writers will be given the exit first, and then the P writers will be given exit. So if the C writers are given exit, market will give a dip, and then market will go up, right? So how can you take the advantage? So when it gives a dip, you write the put and you buy the call. Okay, market will go up, and that's what we did. Like I was talking about 19,500, both the sides, and yeah, so at 3 p.m. when market the candle came, it was happening. And how we took the advantage, 19,500 we wrote the put and bought 19,500 CE at 3 rupees, then closed it at 9, and yeah, and also like 19,500 PE, wrote it at 22, closed it at 2, so 20 points premium gain. And yes, so this was all the overall. So positional writings, everything went worthless. Today call buying, one went 3x, one went 66%, and the other put writing, we got 22 rupees, 20 rupees premium. Okay, sorry, this is like 20 rupees premium. Okay, so that's how it went. And yes, so now you see that you have to wait for the perfect opportunity, and the opportunity will come. Okay, so yes, that's the thing. And now let's talk about the other analysis. So you see that I mean FIs have bought, and almost DIs also have sold for that quantity. And overall, again, overall market is not participating. Okay, so this up move, gap up, but overall market is not participating. And talking about the other data points, let's go to the end of the day data. So end of the day data is suggesting that like put writers are still active. Okay, so be careful, put writers are active, both I mean they have closed majority of the positions, but FIIs overall they have put writing positions. Prop decks, they also have overall put writing positions, but there is something to note, that is the prop decks, they have suddenly increased their futures short today, a heavy future short by the prop decks. And for the FIIs, they have increased the future short, but they have hugely increased the futures long as well. But I told you even yesterday that don't think that since they are increasing their futures long, so the FIIs, the market will continue upward just from this point. market can give a dip, they won't be at a loss because their average price is way below, because their average price is like below 19,000. So they don't have to worry about like any 200 points fall or something. Okay, so that's why like many people think that they have bought today, tomorrow market will rally. Okay, so that's not going to happen. I told you even yesterday. So wait for the perfect opportunity. And yes, now there is one more thing. So overall data is suggesting that Propdex futures, Propdex are bearish in the futures, FI is a bullish in the futures. Okay, so there is a contradiction there. And also option chain is suggesting that we will see some like put trading has been done. So again, that is we I mean market won't fall much according to their data. But let me show you that the worldwide markets are bleeding. So then what's tomorrow, what's in for tomorrow? So as you can see that US markets are falling, and the whole world markets are falling. So it can't happen that we will rally tomorrow. So then what's the thing? That is, there's a high chance that we can get a gap down. If there is a gap down, then be very careful that these big guys long positions, they will be at a loss. Okay, so then there will be some kind of sharp recovery to neutralize their positions. Okay, that's what I think, but again we'll have to check the fresh positions. So that can be like, don't just like looking at the world markets, everyone will be bearish. So even in the morning you see 2 to 3 red candles, don't just jump and short the market. Wait for it, wait for the correct perfect opportunity to come. And then, because it's not like the big guys also will like have taken huge short positions, so they won't go below and take the short position. So they would take the market up and then short it. Okay, so wait for it, and then sell, make a sell on if the data says so. So you have to, like today the data changed here. So here data changed, that is just before 3 p.m. Here you see that 19,400 call riders were closing and shifting to 19,500 P. So these type of changes you have to notice. Okay, otherwise you will be crushed. So that's the thing, like you have to see the data, and if data permits, so we'll go on a sell on rise. But again, just because the worldwide markets are falling, so don't just blindfoldedly short the market. Okay, so that's the overall analysis. And yeah, let's see what happens tomorrow. So again, my final verdict would be wait for the correct opportunity and make a sell on rise. Okay, so that's it for today. So thanks for watching, and keep watching and keep learning and trade safely. See you in the next one.